still less than 15 years into Bitcoin's existence. And I think every kind of cycle it goes through is another test to see how resilient it is. And to the extent that if Bitcoin does not break, if Bitcoin cannot be captured or defeated in some way,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin and crypto. Lyn Alden says, since Bitcoin is working well, big businesses own parts of it eventually. Even central banks will own Bitcoin, and we'll have a Bitcoin standard over time. I think it's one of those things where if one group owned, say, 20% of Bitcoin, I would be very worried because if they tried forks and other things like that, and they'd have a lot of price power to help choose which fork wins. But if a group has a certain amount of the Bitcoin network, I don't see that as an attack on Bitcoin or any other product that it is harder to build big fake markets around assets that are hard to get and can be taken away quickly. One of the problems with gold is that it's not very portable, even though it's valuable and hard to get. Dividing up because the verification process is limited, people have generally wanted to hold on to their gold investments, which caused the price to drop. This is guarded and hypothesized over and over again, and after decades, it breaks down for entities like China or India, just kept taking the gold, and finally things broke. But that's kind of the process usually takes more than one day, but if you have Bitcoin, you can get your money out faster. The node network checks the whole network about once every 10 minutes on average. You can bring Bitcoin out. It grows more slowly and has no short-term inflation, so efforts at rehypothecation and fractional reserve are not taken seriously more quickly, in years instead of decades, and lots of things Lyn Alden discuss. So please watch the video to end, and share, subscribe our channel Everyday Finance, thanks.
I think it's a long-term thing to monitor. I do think that the way that markets work in terms of money, especially on the global scale, is that, over time, people want to get out of weaker monies as they can. And if there's all this kind of fencing that kind of keeps them in, but technology is a way to kind of break through that. And so it's when we see kind of these countries fail, like these currencies fail, they generally don't return to the gold standard. They if anything, they dollarize. Mm-hmm. That's usually their go-to. And so we generally see that as developing countries have currency problems, the developing currencies kind of get inroads in there. And the big question is what happens when eventually these major developed currencies fail or begin to have their kind of ongoing inflationary spiral in a similar way you see in emerging markets. So basically when their debt levels get so high, when their interest expense is completely untenable, when we have a energy shortage, for example, and you see kind of just money printing from these central banks, what happens then? What is the apex predator asset that comes after them? In a similar way that the dollar comes after Argentina, comes after Lebanon, what comes after these major currencies when they eventually start to have problems? And really the only two options I think are gold or Bitcoin. In a world where Bitcoin was never invented, gold would be the only possible fallback mechanism to recapitalize the system, reset, and unfortunately probably build the whole system again. You probably would fractional reserve gold again and kind of repeat this cycle over another century. I don't know. Bitcoin presents another path we can take, and the question becomes, will Bitcoin remain secure and decentralized enough to kind of hold that burden? It's scarcer than gold in the sense that as lower terminal supply, so eventually zero inflation, compared to gold's on average 1.5% inflation per year. Bitcoin is also portable, so you can bring it around the world with you. You can memorize 12 words, and you can bring all of your Bitcoin with you. Whereas if you try to bring dollars or gold through an airport, you're going to be pretty restricted in how much you can legally bring through and practically bring through. And so that portability and that extra scarceness gives it a really powerful advantage. But of course, it is reliant on the global telecommunication system. It is reliant on being able to survive against potential attacks or bugs. And so it's, we're still less than 15 years into Bitcoin's existence. And I think every kind of cycle it goes through is another test to see how resilient it is. And to the extent that if Bitcoin does not break, if Bitcoin cannot be captured or defeated in some way, I would expect it to continue capturing market share. And then should whatever reason it fail, gold is still a fallback option. It's something that, the power goes out and you have gold, you still have your own bare asset money. So I still think gold has a role even in a Bitcoin future. And the main question between gold or Bitcoin comes down to, can someone figure out, can nation states break Bitcoin? Can someone try to find a way to break Bitcoin? Will Bitcoin ever fall from its own incentive structure? Like, will it ever kind of centralize in a way that damages it? And if not, I think it continues taking market share.
There are 16 different fiat currencies in the world. The top few tend to keep their value pretty well, but there is a long tail of currencies that are losing value quickly. These are currencies whose money amounts are growing at rates of 15 to 20% per year or more. In many cases, they say, they look for money from outside sources. I want to hold gold, dollars, and other things. Bitcoin, no matter what, and for some of these tech-savvy people, like, say, people in Nigeria, Argentina, has been through this so many times that they've set up a lot of ways to get steady dollars and coins. Offer a way for them to hold dollars without relying on their local banks. Instead, they trust in an offshore bank. They trust an outside bank. It's like middle-class people having offshore funds. Not just the rich, so that's a new idea that meets a real need out there, and I think that will probably stay that way for a while. As long as either we regulators don't go after stable money. Argentina couldn't really stop people from getting steady coins because they tried so hard to do so.
So I think in the intermediate term, it does. These are competing monies that people in these countries can choose from. One is generally doing better in terms of price appreciation, better scarcity metrics, more decentralization, but more volatility. That'd be Bitcoin. Stable coins appeal to people that, a lot of these people in countries, they want dollars, but it's hard to get them.
Right.
Their bank won't sell them to them. You can only bring so much physical cash through an airport legally. And so there's only so much dollars in these countries that people can get their hands on. And stable coins represent a new vector in there. So if we kind of look at the currency map around the world, there's 160 different fiat currencies roughly. The top handful hold on to their value pretty well. Then there's this long tail of rapidly devaluing currencies. Currencies with money supplies that are going up 15, 20, 25% per year or more in many cases. And so they seek out external monies. They say, okay, I want to hold gold, I want to hold dollars, I want to hold Bitcoin, whatever the case may be. And for some of these more tech-savvy ones, Nigeria, for example, people in Argentina have been through this enough that they've established a lot of ways to get dollars. Stablecoins are a way that they can hold dollars without trusting their local banks, and instead they're trusting in basically an offshore bank. They're trusting an external bank. It's kind of like offshore accounts for the middle class rather than just the wealthy class. And so that is an innovation, and it is serving a practical need that is out there. And I think that probably persists for quite a while, as long as either US regulators don't go after stablecoins aggressively. They could. So Argentina can't really stop people from getting into stablecoins effectively, but the US government, if they wanted to, could stop people from getting into stablecoins. And then two, if we get to a point where even the dollar itself comes under considerable weakness in, say, the Fed's no longer able to tighten, there's an ongoing fiscal crisis, that's when you could get significant dollar weakness and Bitcoin kind of breaks out from that. So I think in the intermediate term, stablecoins are a powerful monetary technology along with Bitcoin, but people do have to understand the risks. These are centralized offshore assets.
Right.
I think as long as they're unable to get us above a certain percentage, I don't think it's an issue at all. And I think it's inevitable. I think basically if in a world where Bitcoin is successful, large institutions are going to own chunks of it. That's eventually even central banks would own significant.
We have a Bitcoin standard.
Exactly. And so over time, I think it's one of those things. If any one entity were to own, say, 20% of Bitcoin, I'd find that very concerning, because if there were kind of attempts at forks and things like that, they'd have a lot of pricing power to help determine which fork can win. But if an entity has a few percentage of the Bitcoin network, I don't view that as an attack on Bitcoin. And in general, an asset that is, the scarcer an asset is and the faster it can be withdrawn, the harder it is to build large paper markets over it, right? So one of the challenges with gold is that as scarce and attractive as it is, the portability is limiting, the divisibility, the verification is limiting. And so historically what happens is people want to hold their gold in vaults, and then it gets fraction reserved and rehypothecated. And that eventually breaks after decades. Eventually entities like China or India just kind of keep taking the gold, and eventually things break. But that's like usually a multi-decade process. Whereas if you have something like Bitcoin that can be withdrawn quicker, every 10 minutes on average, the entire network is audited by the node network. You can bring Bitcoin out. It grows more slowly. It has zero terminal inflation. That shrugs off attempts at rehypothecation and fractional reserve more quickly. The cycle's years instead of decades. Right. And so again, it comes down to, can someone find a way to break it? Does the mining incentive structure ever fail? I mean, so far after 15 years of operation, the largest miners in the world are still like, say, 5% of the network or less. And they're not the same ones that had 5% of the network 5 years ago. And so the mining distribution is still very decentralized. Mining pools are a little bit of a concern, but they don't custody the miners. So if a mining pool ever, kind of attempts to centralize the network, miners can just redirect their hash rate to another mining pool. So that's like a mining pool centralization is kind of a risk of a temporary attack, but not a long-term capture scenario. Really, it's about that miner decentralization that matters. I think we have to watch how much hash rate comes to North America, right? So a big narrative in the early kind of Bitcoin period was, look how much hash rate China has. Now America is the biggest miner. And I generally want to see a little bit more global diffusion of the hash rate. I think that's healthy for the network. I'd like to see more in El Salvador, more in Australia, more in Africa, more spread across the world. But overall, I think the current state of decentralization is very healthy. There's still some improvements that could be made with, a little bit more decentralization, but I think it's holding up very well.